Hi, I'm Jane Mitchell, Financial Advisor at AdviseWise. I'm joined by Dr. Steve Garth, the Chair of our Investment Committee. We're looking at the market update for the last quarter. So Steve, how did the Australian market do?
Jane, we're going to see that markets around the world all behaved quite similarly. If we start with Australia, you can see over the last 12 months from September last year until just the other day, it's actually a great return. It's 13.5%, really good. But you'll see that the quarter return is a little bit negative. It's flat. And we're going to see this in other markets. It's really got to do with just a week or so again, the Reserve Bank and the Federal Reserve in the US both came out and said interest rates are going to stay higher for longer. And that unsettled the market. And so markets are all off in the quarter.
And if we look at global markets, particularly the US and the tech stocks, what do you see there?
Yeah, so I think as most people would know, it's actually been the tech stocks that have been driving the great run in US equities. And of course, the US is about 65% of the world market. So when you look at the chart here, you can see that overall, the world is up 21.5% over 12 months. It's a pretty good return. But once again, we're seeing the same thing, flat for the quarter. And that's because principally, the tech stocks have fallen out of bed in the last 2 weeks. They're down about 10% from their highs in July.
If we think of emerging markets and we particularly look at China, they seem to have a lot in the media about their forecast for their growth, and that's got an impact on the world. How do you see that?
That is absolutely right. So the emerging markets, when you look at the 12 months return, sort of not too bad. It's a bit like Australia, it's 11.5%, but that's still a good 12 months return and very small positive quarterly return. Now, the reason why the emerging markets aren't thriving as well as the developed markets is because of China. It's about 35% of the emerging market index. And even though economists were expecting the Chinese economy to shoot the lights out after the lockdowns ended earlier this year, that hasn't happened. The Chinese economy is just not firing, so the stock market is not really coming up either. And you're absolutely right, Jane. The World Bank recently came out and said the slow growth in China will actually have an impact on global growth.
And that's expected for a little bit longer as well, isn't it?
It'll be over next year and maybe even the following year. We expect lower than normal growth.
Yeah. So that leads us to kind of bonds and interest rates. You know, that's very much topical at the moment in the media. So
it really is. But you can tell in the chart here that the bond market has been signalling that interest rates are going to go up and will continue to go up a little bit further. So what we're showing here, Jane, is the yield of the US 10-year bonds. And once again, the US is the biggest part of the global bond market. And under that, quarter by quarter, we're showing the return of a global bond index hedged to Aussie dollars. Now, when yields go up, bond prices go down. And so we can see that in the last quarter, it's a minus 2.4% for the global bond index. Now, while that's really bad, there is some good news there, Jane.
Oh, we want some of that.
And the good news is that bonds are yielding 4 or 5%.
Right.
So even though the actual price return is a bit negative, the income from bonds is offsetting that. So when you look at the 12-month numbers there, they are positive numbers.
And that leads us to our investment philosophy.
That's right, Jane. It's all about staying for the long term. It's about being in a diversified and cost-conscious portfolio, and that's what we do here at AdviseWise.
Exactly. So we thank you for all of your insights and sharing that information for our last quarter update, and we will see you next time.
Thanks, Jane.